Hello everyone, welcome back to the Mr. Investor channel. Today's topic is keeping money out of the bank, how to do it in general and why. Maybe after this video you'll take all your money from the bank and change your mind about the bank, who knows? Before the video starts, make sure to like and subscribe to our channel. Turn on the notification to be notified when a new video is ready for watching. If you've done all this and you're ready for this topic, we can get started. Mistrust toward bank and other financial institutions prompts more fearful individuals to seek alternative venues to park their capital. Others may be avoiding the banks on principle, given their participation in the reckless lending that led up to the housing bubble bursting and triggering the Great Recession. Of course, after last year's wildly volatile stock market, banks have started looking safer. But all the same, it's worth looking at these 7 alternatives. One in particular is considered the safest place to keep the cash. If you're still looking for alternative places to park your money, here are some possibilities. Federal bonds. The U.S. Treasury and Federal Reserve would be more than happy to take your funds and issue you securities in return, and a very safe one at that. A U.S. government bond still qualifies in most textbooks as risk-free security. Unfortunately, many individuals and institutions already know that and have entered the bond market ahead of you, which has bid bond rates to very low levels in this time of crisis. On April 9, 2020, the yield from a 10-year Treasury note was 0.73%, an all-time low. If the low rates don't deter you, government bonds are one of the safest places to keep the cash. Real estate. In disquieting times for the banks and the stock market, the allure of real estate investment can be strong. Become a landlord. Put down some of your principal on a property, fix it up a bit, rent it out, and have your tenants pay off the mortgage. Or if you're interested in a shorter-term opportunity and have more experience, maybe try flipping houses. Done right, real estate can have a huge financial upside, yet it can also be a risky and sometimes fickle investment. True, residential and diversified real estate investments have averaged about a 10% return in the past 20 years, which is slightly better than the S&P 500 in that period. Precious metals. One doomsday scenario in which financial markets cease to function holds that gold, silver, and other metals such as platinum or copper will continue to retain their value, if not appreciated. The likelihood of having to return to a barter system with physical goods is minimal, but it may make sense to hold a certain percentage of your assets in this form. For one, precious metals have historically provided a lower negative correlation to other asset classes like stocks and bonds, which is to say when those investments go south, metals are unlikely to follow at least very far and may even increase in value. Cryptocurrency. Cryptocurrencies are another alternative investment option. There are several choices. Bitcoin is just the best known. So-called cryptos offer individual investors a unique opportunity to get into what is still very much an emerging technology. Of course, this is also a high-risk, high-reward opportunity. For example, after soaring to stratospheric highs, Bitcoin lost about 3/4 of its value in 2018. You shouldn't invest much or any funds in cryptocurrency that you'll rely on for your future. Yet most analysts believe that these alternative currencies are here to stay, and brave investors may want to pitch a stake on the off chance of hitting it big with one of them. Cash, hidden away. Although stuffing money under your mattress has become a cliche, it unquestionably keeps your funds close at hand, if not necessarily secure. You could, of course, also hide your assets in a safe deposit box or safe. Again, this method probably qualifies only for a doomsday scenario or for times of a short-term liquidity crunch. Even then, keep only a small stash, not least because inflation steadily erodes the value of currency over time. In deflation, the opposite is true, of course. Well, that's it for today. Please don't forget to like and subscribe to our channel. Press the notification button to never miss more videos like this. Share with us your opinion about keeping money in the banks because we'd like to know it. There's a comment section below, so put it there. Hope you enjoyed today's video. Have a nice day, and see you again soon.